marketing companies, we were having this conversation with a guest earlier, and he put it well. The government's starting to explain the story here much better in terms of what's the fixed asset base, what these companies trade at, etc., etc. Go on.
Yeah, so the Nifty PSC index is almost at 1 year highs and almost at all-time highs, if I'm not mistaken. But what we own out here are power utilities. We own logistic majors like Container Corporation. We have Power Grid. We have the power financing companies. The power finance corporations. We have the mortgage housing finance company, the largest. I mean, the key thesis out here is that valuation vis-a-vis growth is conducive. And, you may argue that PSUs will always trade at lower valuations, but how much lower valuation is the key point? And the rest of the market is trading at whatever valuation they are trading at. The discount to the private sector, cannot be that big is the whole argument. And the whole thesis has actually played out over the last 1 year. The Nifty PSC index has done well, and our stocks also continue to do well. As regards the oil marketing companies, look, I mean, there's no way to predict, the earnings on a yearly basis because of the volatility of crude prices, and the best way to value them is on a price to book. Because if you can't predict earnings, actually it's futile to actually value these companies on price to earnings. And so price to book. And even out there is a lot of comfort. And, these stocks also have got re-rated. Plus the dividend yields obviously plays out quite well. So, the story is now being well articulated by the GOI. As far as the oil marketing companies, again, they have got re-rated. They have immense potential even from here. But that's how to go about it.
Okay. By the way, I was looking at some more details on a couple of these sharp result reactions. Ixigo, there is a ESOP expense of 26 crores. That's what they've called out. And they're saying that X of this, it would have been a better performance. Actually, it's almost 27 crores.
In fact, I was just looking at their cash flow from operations. That's actually increased year on year. And at the same time, we've seen an improvement across all their segments as well. So, Revenues Tech comes up for you right now. Flight business has shown a strong growth. That has been a growth driver for the company going forward. The margins out there are fairly strong as well. Train, obviously, they have the highest market share outside of IRCTC when it comes to trains out there too. The margins have been fairly steady. The bus business has been growing. So, business per se has been growing. I think it's just that ESOP cost and at the same time below the operating cash flow sort of numbers that are impacting them. In fact, from March to now, even their cash has, the balance of cash has increased by quite a bit. If I'm looking at their overall numbers here, the cash balance was close to 52 crores at the end of March. And right now, that number is close to 129 crores.
Yeah, that's what I was completely baffled, saying for the amount of traveling that's happening and the kind of bookings that are happening on, even on Ixigo, and just the increasing number of users, how can they do an EBITDA loss? So that makes it clear that the business seems to be, chugging along at a fine clip. It is that exceptional item and the ESOP expense which has pulled down the results. Anyway, since we're talking results, let's take this up with Manish as well. Manish, good morning. Great to have you in. I want to talk about how you'd read through the commentary that came in from L&T. I don't know if you had a chance to look at some of the headlines, but it's really heartening. The order intake, not just for this quarter, I think it's up some 50%, this quarter. They have indicated that in all probability, they'll be exceeding their full year order intake guidance of 15% as well. They're saying they're seeing some signs of a pickup in private capex. That sounds amazing. It sounds like music to the ears. Would you believe it to be durable? And if yes, then what bearing can that have or should that have on portfolio stock selection?
Well, I think biggest commentary from them was basically exiting the Hyderabad metro. I mean, that is a big problem for the company, for quite a few number of years. And they're getting into EMS manufacturing. That actually is the big mover and shaker out there. I think apart from the order book position, which has been at record highs for them, execution has come out well. Slightly disappointed on the margins front, came in at 10%, but that's okay. And valuations are pretty conducive from that point of view. Government capex is continuing thick and fast. That's perfectly fine. And now their commentary about private capex should help at the margin in terms of the risk is to reward for L&T. So from that point of view, I thought, numbers were pretty decent. We own the stock.
Okay, so just to extend that point, I mean, for every fresh 100 rupees, say that, you have to invest. Okay, before I ask that question, I think the meeting has ended and the two tall leaders of the world have stepped out. And I think it's...
As Mangalam points out, 5'11" and 6'3".
6'3".
Just in case you're joining us late and you're wondering what we're talking about, we had a bit of a debate at the start of the show on the height of these two gentlemen. They're both exceedingly tall figures at the world stage. And perhaps literally as well.
Literally and figuratively, and the GDP.
Maybe guys, let's just turn up the audio if we can. Let's. I don't know if I think there will be. Okay, there is no audio.
Just visuals, yeah.
Yeah. I'm not. So they're parting ways.
Are they smiling?
They're parting ways.
Mr. Trump is walking away very, very quickly from that frame.
We'll know shortly, I think. Just stay tuned to social media posts of Donald Trump.
Back in the day when there used to be IT results, right?
Yeah.
There used to be a lot of focus and discussion on body language.
Right.
Yeah.
Body language, whether this
that still is a lot of discussion, body language, where people are positioned, how they stand, which table of, which side of the table are people sitting on, etc. That's a different science altogether. But for now,
are they wondering whether they're going to the same place? Is there a press? We don't know, right? I mean, are they sort of heading back?
For now, what we know is that Xi Jinping's cavalcade has moved, and it's moved fast. While
no, I'm just saying, is there going to be a joint press conference, statement, or what? We'll have to just see, but because we don't know whether there is any of that. But yeah, I mean, these are. I mean, it's the first meeting in 6 years between the two leaders, personally, and I assume there will be a statement at least, if not more, from both sides. Maybe not from the presidents themselves, but maybe their underlings. Will want to talk and sort of communicate to the world what exactly has been agreed upon, etc. But I think President Xi's cavalcade has moved on. President Trump's is still there, and we will see.
You don't see the underlings together either. We saw President Trump and Xi. They came. They
no, they were there.
No, the underlings were not together. That looks like.
That's Marco Rubio.
Exactly. Yeah.
There's
the Chinese
Howard Lutnick. There's Scott Bessent somewhere there, and yeah, there you go. So
the two sides have parted ways. Now we need to understand if it is a final parting or whether there's going to be a recongregation and then a great joint statement or a joint press conference of sorts. No clarity on this, at least as yet.
This really sounds like sports commentary out here. We're just trying to figure out what.
Let's go to Manish, Mangalam. Let's go to
Manish. Actually, that's the best. Manish, we got those visuals, and this is something that none of us can actually predict what will happen at what point in time, and what happens as well is unfortunately not usually permanent. So, be that as it may, all those things which are moving around, let's talk about the things that are more important here. Earnings season so far hasn't been as bad as the street was fearing, and the belief is that maybe the second half of this year we see earnings actually pick up because of all the GST related issues, and all those triggers that have come by. So what's your expectation for earnings in the second half of this year, and which sectors according to you, will lead them? Where should one bet?
Yeah, so second half earnings obviously is likely to be better than the first half on the back of lower inflation, GST cut, better spending and all of that. So previously we were building in 10%, now basically 13%, 13.5% sort of full year EPS growth for FY26 is what we are working at. Obviously, discretionary consumption looks much better placed currently. And we've seen the festive season demand pick up. Auto sales numbers are speaking for themselves. And I think out here, in the case of discretionary consumption, the premium segment seems somewhat better placed. And there is an premiumization story playing out in the discretionary consumption. Demand looks more stable and predictable. So I think the premium end of consumption is what should do well in terms of stock performance. Banks, obviously, of course, we believe that, taking away the rate cuts, if that happens, then maybe the margins pressure won't go away. But if there is no rate cut further, then margins for banks should start to pick up from the third and the fourth quarter. Credit growth is likely to be better. BFSI looks good. And even on the insurance side, I think some of the numbers and the GST cuts and the penetration story, etc., would start to bode well. So BFSI is a space, discretionary consumption as a space, apart from the normal capital market related themes, selectively hospitals and hotels. Of course, those are part of the consumption story. These look quite good from near-term standpoint. So quarter 3 and quarter 4. Somewhat apathetic to the large and highly valued stocks, EMS, power, renewables. Of course, there the valuation discomfort is obviously there.
What do you make of the IPO, space right now? A lot of the issues coming in, a lot of conversations around the growth prospects of these businesses, valuations. Some people calling it astronomical, some people calling it the underlying TAM fairly being good. Where do you stand on these?
Again, the problem is valuations. I mean, just can't put my handle on valuations on a majority of these IPOs. These are great companies, good companies, but given the size of the total addressable market and, 20-25% sort of a growth, you're wanting a valuation of 230 times. I mean, this is just not palatable. According to me, these may be great businesses, but at the end of the day, you got to make money. Pine Labs looks somewhat okay, according to me, provided they come out with some sort of a palatable valuation in the ballpark of 30,000 crore or below market cap, because the projected numbers, according to me, for the next 3 years look somewhat okay compared to listed peers that we have. There could be some scope of making money out there if the valuations were to be below 30,000 or in that ballpark. Rest of them, the growth vis-a-vis valuation, just don't look that great. These may be great platform businesses, but in the garb of new age tech companies, I mean, we just can't pay anything.
Yeah, everybody calls themselves a tech company these days. No matter what you do, everybody is a tech company. I remember, I think in Mangalam's conversation, that's a term Lenskart used for itself, that they're a technology play. Everything is tech these days. Shoes, eyewear, I'm sure pizza, pasta, everything is tech, right? That's just the world that we live in.
That's something, even the Domino's global CEO had once said that we're not a pizza company, we're actually a tech company which delivers pizza. And that actually made sense as well because of the number of app downloads that Domino's had and the technology that went behind them actually delivering those pizzas. It was more like a tech company than a pizza company.
I have a fundamental problem with that. You've got to have the pizza right.
Yeah.
And then the technology and the delivery comes part of it. But you've got to get your pizza right. Applies to everything else, that you're doing, your core business right. But anyway, that debate aside, I just want to come to the financials once again. Manish, now these deal-bound banks, RBL and Federal specifically, I'll throw in maybe a Yes Bank as well. So if the deals go through, there's going to be a change. There's going to be, a foreign perhaps player coming on the board, if not taking over, control in the case of RBL. Now, how should we read through in terms of just, share prices and what this could mean? Do you think it could mean a more durable re-rating? Because, for instance, Federal and RBL are already at very close to all-time highs, right? These stocks. So as an investor, should one focus on them, play it for the long run, or are you just better off in larger banks which are doing really well? I mean, like the likes of ICICI, etc.
Well, I would call them high beta mid-cap banks. The names that you alluded to. But at the end of the day, from a medium-term perspective, it all boils down to earnings and what valuations are likely to pay. Some of these deal-bound banks, I mean, the numbers are not going to change in a hurry for the better. Because banking is a tough business, and just because you throw in a lot of capital inside a bank, you will reform. Processes, etc., will get mended, and all of that is likely to play out, but it's going to play out over a period of time. So if let's say the capital infusion in RBL Bank happens at, let's say, 280 rupees, the existing price to book previous to the deal was 250 rupees. I mean, everything said and done, what are we looking at? FY27 numbers, then you could at best pay, let's say, 1.2 times price to book. You're almost there. So what happens for the next 2 years? So I think the proof of the pudding lies in the, how the numbers play out over the next 2 years. And then it is basically valuation, except for a Federal Bank, which looks more of a structural story. And this is the stock that we own. Rest of them, we are still evaluating whether there is still money on the table. But near term, it's all about the high beta, news driven. That's basically played out in some of these.
All right, Manish, thanks very much for joining us. Good speaking with you. Appreciate your time here.